Welcome to Markets Now. I'm Michelle Rook along with Allison Thompson with the Money Farm. Livestock futures kind of leaning mostly lower this morning. We're mixed over in the grain trade. Corn and wheat futures trying to bounce today while the soybean market is setting back. And Allison, let's talk about corn first of all. We did get a bearish shock there with the higher acreage number by 800,000 acres, even though we had lower yield. And so the bulls were kind of disappointed yesterday, but we did hold pretty key support, didn't we?
Yeah, we did. We tested the old contract low around that 473.5. Very impressive, actually, and maybe even a little bit spooky in some respects. Normally, when we get close to those lows on data like that, we'd see them run some stops below, create a new low before coming back. So in some respects, we thought maybe we'd see another low maybe printed here in the near term. But so far today, it looks like it's holding, and that's a good sign. Maybe the low is in for now.
Yeah, and corn obviously getting a little help from the wheat market, but are there also some in the camp thinking that yield might actually go down from here on corn?
Yeah, I believe so. Especially when we did see the shift in acres again yesterday. There were obviously some decent sized shifts from the June report on where acres are being found. They found more acres in some of these fringe states. And honestly, that's not going to be helping your national yield out, especially when some of those acres that come from up here. We're not going to be getting those 200 bushel yields that a lot of those I states get, who actually did see some yield or some acres decrease in those areas. So I do think that we definitely have the ability to see yields move lower going forward. And I have a feeling the trade's even thinking that this morning too, by touching that low and now trading higher as well. They may not believing that is the end all be all yield at this point. So we know that harvest is going to be starting here sooner than later. We're probably going to have corn and soybeans going at the same time. So those early yield reports are definitely going to give the trade some confirmation. And I think they're already turning their focus to those numbers when they do come out.
No doubt. And then I think the tendency for USDA is when they have a yield cut in September that maybe you also have one in October, right?
Yeah, that's very true. A tendency is to be that way.
Yeah. Okay, let's talk about the wheat market because wheat is giving some help to the corn market this morning. We had a nice reversal, it looked like in Chicago, we'd have contract lows, but the other two classes were higher as well. Have we put in a bottom there, do you think, Allison?
I sure hope so. I think everybody was definitely surprised to see a bullish USDA report for wheat, especially with us trending lower here and making new lows pretty consistently over the past couple of weeks. It was really good to see some fresh news. So actually, we did see a reversal get printed in KC wheat yesterday, and Minneapolis did not make a new low yesterday prior to the report, unlike Casey and Chicago made those lows prior to the report even being released. So they were really anticipating some pretty poor data to be released, but it came in better than expected. It was really supposed to be a neutral report. We weren't supposed to get a whole lot of new data for wheat. Again, that small grains report's coming out the end of September. So it's kind of expected to be neutral. So to get some good data, some lower ending stocks, especially on the world numbers, the U.S. ending stocks numbers did not change, but we did see an adjustment there on exports. They moved some hard red winter exports to actually spring wheat. So spring wheat was the leader higher yesterday on some renewed export, especially some headlines there, at least of some renewed demand is a good sign. So Minneapolis led the way higher yesterday. Now it seems like we're playing catch up here today.
But do you think when we get the small grain summary out at the end of the month that we might see an adjustment up in spring wheat yields and production?
Yeah, we definitely could. It seems to be the case across the board. Everyone was pleasantly surprised with their wheat yields this year, despite the production issues that we've seen throughout the season with weather. So yes, there is definitely a possibility that we could see some better production numbers in that report. But on the global side, that's going to be the key here. If we continue to see lower production numbers from our big competitors, where else are they going to turn? Are they going to be turning here? If Canada is low, if Australia is lower, Argentina is lower, the EU, I mean, all those saw adjustments lower yesterday. So it is worth watching those global numbers. And then, of course, it just goes back to demand. We're going to need to see some proof.
Absolutely. So soybeans were lower yesterday, and again this morning we're seeing some follow-through selling. And that's in light of a 220 million bushel ending stocks figure on a domestic basis, which, in all rights is pretty tight here. But why is the market fading this in your mind?
Yeah, well, yeah, it was kind of surprising to see that because yes, we did see a lower ending stocks number, but it was higher than expectations, and a lot of that had to do with the demand adjustments that they made. They actually did cut exports and they did cut crush. So two pretty big important things that we've definitely been having our eye on, but we've also seen improvement on too. We know that crush has been decently strong. We've seen decent margins there, and we also know that we've seen a good uptick in export sales, but we're entering the peak season. So we're really going to be looking now for confirmation of that. Hopefully we do see some China and unknown sales come in here and start buying it. It'll definitely change the trade's tune. But as of right now, to see cuts on those things are kind of bearish aspects, especially when we had in our minds that those were some pretty good things, or at least starting to see a turn with good export sales. And like I said, crush being pretty decent here over the summer.
Yeah, I know there's some thought we're going to continue to see South American competition, so that's probably part of that. I wonder, on the yield, is the trade thinking that yield may go up in the next report, or will it go down? I mean, what's the tendency there?
Yeah, well, yeah, tendencies aside, we did see some slight acres adjustments as well, like we did in corn, not quite as dramatic in soybeans, but still notable. Again, adding to some of those fringe acre states, and that's not going to be helping a 50 plus national yield. So I have a feeling that we could still see this thing go a bit lower, and below 50 would definitely spark some market attention. And also, like you said, with South America, it is the time frame here where we're going to start seeing them planting. And with El Nino, we should start seeing a shift of weather as well. So the next month, it's going to start turning into a South American weather market. And with production happening at the same time, I'm assuming we're going to see some volatility re-enter the marketplace.
Yeah, and here again, like you said, with corn, soybeans true as well. We're going to be watching those combine reports really close, aren't we?
Yes, very closely, especially with them being at the same time this year. It's kind of unheard of. So it's definitely going to create a whirlwind, I think.
Okay, cattle market. Not the best close yesterday after new highs and lower corn futures. And so is that market getting tired, or what's going on there? Because we're seeing a little pressure again this morning.
Yeah, we are. And they've been looking for some fresh cash market news. But so far, cash remains strong. Just depends where you can find some of those bids, but they can be had. So, yeah, honestly, the fundamentals of cattle definitely have the perfect storm going on. So it does continue to move things higher, but we are going to see some back and forth action, especially when we start seeing some of those highs being touched. Even in hogs making 30-day highs yesterday. So some back and fill action is definitely warranted, but they're also feeding really cheap right now too. So if we do see a decent sized rally in corn, wheat, beans, we could see some adjustment from these toppy markets on the livestock side. So I'll definitely be watching. Always a little spooky when you start seeing new highs and everything continue here. Make sure you have some protection in place. Look at livestock insurance. Look at some puts to at least be protecting yourself here, because these are phenomenal prices.
Yeah, and then the cattle market always looks at the economic concerns that might be out there, macroeconomic concerns. And we had CPI data out this morning, came in a bit hotter than expected. So is the market maybe keying in on that just a little bit too?
Yeah, obviously this fresh inflation data every month is something highly sought after to tell us what the Fed's going to do next. And we know that cattle or livestock have definitely been more susceptible to those movements. So it'll be interesting to see how the day progresses here. But we did get the August data came out today, and the CPI for the month did come in higher than expected, 3.7% for August versus 3.2 in July. So it's the highest we've seen since May of this year. So we are seeing it come ticking back up. But again, we know it's largely due to those higher energy markets. No surprise there, since we've seen some new highs. But if that continues, it could continue to move the CPI up more. On the other hand, though, obviously when that news came out, we did see outside markets crash down, but they've actually started coming back up here, and that's due to core inflation. If you take out the oils and you take out the fuel and energy costs, we actually see inflation actually remain pretty steady. And actually on an annual basis, it actually did go down from last month. So maybe they're trying to find the good news in the storm of news we got this morning on inflation, but there is some to be had. But we know that the feds are definitely more concerned about this core inflation and CPI. So which one they decide to follow, especially in making some interest rate moves here this month even, I have to say that probably that CPI data that came out this morning could definitely push another move higher on interest rates.
Absolutely. I think they're meeting next week, so we'll see what they do. All right. Thanks for joining us. Allison Thompson with the Money Farm. That is Markets Now.